right? You found a property. Now what do? You need to analyze it like a business.
Welcome back to the Cornerstone Real Estate Team podcast. We're so happy that you're with us today. Today we are talking about investments. Raise your hand if you want to be a real estate investor. Everybody wants to be a real estate investor, but you got to know some things about investing. So today we're going to break these things down so that way you do not make a mistake, but you make a smart move in buying the right investment. Jamil, welcome to the podcast.
Thank you for having me today.
That's
Just kidding.
Every podcast.
So the question is, do you want to make an informed decision when you buy an investment property or any property for that matter? Number one thing is location. Does the location seem good to you? Location still rules. It matters more than ever. But the question is, what defines a good location, right? Walkability restaurants, remote work-friendly neighborhoods, new developments, transportation, shopping. What is it that matters to you in buying that investment property? Is the market there growing? Is it a micro area for jobs? Is what's happening that is gonna make the property go up in value and appreciate? Is there a college? Can you get good rents? These are questions you have to answer, and your agent can help you with that.
Right. Also, you got to look at cash flow versus appreciation because each neighborhood is different in investment. So you got to look at strong rental demand, positive monthly income. That's very important. Cash flow properties. You got to look at appreciation plays, up and coming areas where value grows over time. Is there new development? Is the community coming up? Is there change that will impact your value? And the sweet spot of a property is that offer both stability and upside. So you want stability in rents and an upside in rents. That yearly you can take these rent increases and you're in the market and your property cash flows more and more every year. So you have to know that cash flow pays you today, but appreciation, it pays you tomorrow. So Jamil?
So, the next thing are the numbers, right? You found a property. Now, what do? You need to analyze it like a business, okay? You need to look at it and say, what is the cap rate? What is the net operating income? What is the cost of the taxes, the maintenance, the insurance? Insurance is up, by the way.
That's right.
Management fees. Are you going to manage it yourself? Do you have a handyman? Because these are all costs you're going to deal with, and do the numbers pan out? If I put $200,000, what am I getting after everything is said and done for the $200,000 investment? Am I getting $2,000 a month for that netting, or am I getting $500? Now, if I'm going to net $500 for $200,000, maybe that's not worth it. So you need to look at the numbers. It's really about the math, not about the feeling, because you could fall in love with it, have a good feeling about it, but. And really, that is the biggest mistake that we see with investment properties. We've seen it over and over again. People love an area, they love the house, they see themselves there in 10 years or whatever, but the numbers don't work and they end up losing their shirt. So don't go by feeling on this one, go by the numbers. Look at purely numbers.
That's right. And then we want to look at another point, which is condition and value added potential. A lot of times you make the money in your purchase, not just in the rents or the sale. So you want to look at the condition. You got to look at move-in ready versus a fixer-upper. There's some properties that you can buy and you can add your spin on them. You can renovate them. You can bring up the rents. You can do things to tweak the property to make it a much more attractable for renting and when you come to sell it to get more money. So there's renovations that you can do that adds value to your property, to the bottom line. Improving the layout. Sometimes you can go into a unit and take out a wall and make it really open. And so there's things that you can do, or even if you have extra land, you can add more units. So increasing the property value through smart upgrades, that's forced appreciation. So you have to look at the property, and each property is a different case. It's not general. So you got to look at it. So a smart agent will go through it with you, give you his or her opinion on what things you can do to improve it, whether from rents, improve a rental income, or appreciation in value. Because you make your money when you sell. Not only that, but when you buy. When you buy, you really are getting the best deal. So when you come to sell, you are really making the money. So purchasing smart is very, very important.
Buy low, sell high.
Yeah.
Right? That's the theory.
Of course.
And last thing we're going to talk about today is market timing versus time in the market, right? A long-term mindset wins. I mean, real estate has shown long-term you are going to win. You're going to make money. It's going to appreciate, and you know you're going to have some value there. Interest rates might be up and down, so timing that is hard. It's a better market for you when interest rates are low to sell, because you're going to get more people pay more for that. And consistency beats perfection. So being consistent, having the property rented, and up to date, and having good tenants, good people in there that pay the rent. That's important. That's going to help with appreciation, because they take the net rents and calculate the cap rate. So basically what you're looking for are good tenants that pay, and you keep increasing the rents until you're at the market every year. The biggest mistakes are people do not increase rents, and they lose value on the property that way. Because if it is a rental market where you are renting out properties in that area, let's say like Sacramento, and it's a rental area where people just rent there, and you're not increasing rents, guess what? You're going to lose money, okay? Because they do the value based on income. So look at it like a business, treat the tenant like a business, and keep increasing the rents as much as you can without losing tenants.
That's it, folks. If you like to become a real estate investor and you don't know where to start, this video is meant to give you some tips, but we can take you through live scenarios and really break down every property that we look at and give you our understanding and what we see. And you're talking to people here that are investors. We have properties, we bought properties. We know what to look for. So you don't need to feel lost. You just need to have the right person that you work with, and we'd love to work with you. If this is something that you like, comment below, call us. Make sure you follow our pages on YouTube, Instagram, Facebook, TikTok. We are there with a lot of information. We love to educate and help, so that way when you want to make a decision, you are informed. Thank you for watching, and we'll see you next time.
Have a great day.